Today I'm going to talk about Compass Minerals. The subtitle is "Who Says That Salt Mining is Boring?" The format, given that I wasn't given specific instruction on the format, I've just got a few slides to go through. Feel free to jump in if you have questions. Also going to save time for Q&A at the end. But the idea is to go through some of my slides, and then I'd be happy to get people's feedback and take questions at the end. So a little bit of safe harbor. This is not investment advice. Do your own work. These opinions are mine and don't necessarily reflect those of Cove Street Capital. Can I get everybody to mute themselves? Thank you. So just a little bit about myself. I work for a firm called Cove Street Capital. We're a long-only value investor located in Los Angeles, focused mostly on microcap, small and SMID stocks. I live in the SMID world more than anything else. We take a 3 to 5 year time horizon on all our investments. We are not necessarily activists, although we have run proxy battles. We consider ourselves suggestivists, which means that we are in the background in almost all of our investments, making suggestions about how companies can improve, either in the form of capital allocation or compensation or IR, anything you can imagine, especially in smaller companies. And our 3 investment pillars are business, value, and people. So this presentation will be focused on those elements. A little bit about myself. I'm a co-portfolio manager of our small cap plus strategy. That is our SMID strategy. I know this conference is more focused on kind of small and micro, so I chose an investment that fits squarely in small cap. It is one of our larger positions, and I'm going to talk about it in a minute. I'm about to celebrate my 10th year at Cove Street, which feels like a really long time in the investment industry. I think it speaks to our culture. And then for anybody who used to follow the Inoculated Investor blog back in the day, that was me. I was the guy who was crazy enough to take notes at the Berkshire meeting and post them for people. This was pre-streaming and pre-Capital IQ transcripts, so I did it all by hand. So the company that we're going to talk about is Compass Minerals. These are yesterday's numbers, but I don't think anything much changed. Stock price is around $71. Market cap around little less than 2.4 billion. Enterprise value around 3.5 billion. Right now it pays about a 4% dividend yield. Corporate margins are in the low 20% on an EBITDA basis. And then you have to remember always that capital intensity is important. So this is a slightly capital intense business because it is a mining operation. So CapEx to sales is around 7.5%. So I'm going to go through the 2 segments, and then I'd be happy to stop and because the salt segment is the most important one. So I will pause at the end of this slide and see if people have questions. So the salt segment has high 20s EBITDA margins. Its main asset is it owns the largest underground rock salt mine in the world. It's in Ontario. It has an 83-year mine life, so it's not like only have a few years left. So this is a long-lived asset. The demand in North America,
Jacob's just not communicating.
I just love this traffic.
Sorry, the demand in North America is about 39 million tons of de-icing salt and 10 million tons of consumer and industrial salt. And so we're going to talk a little bit about de-icing salt and why that's so important. They also own the largest rock salt mine in the UK, and they also own a smaller mine in Louisiana. So the main use of their salt is for de-icing. Anybody who lives in a place where it snows a fair amount or it gets icy, that you can't drive and you can't walk unless people put salt on the sidewalks and the roads. Municipalities are the main customer here. So every year municipalities have to kind of figure out, do we have enough inventory of salt? And if not, let's contract with Compass or one of its competitors to buy salt. And so that's really the main use of the salt. And that's why this business is very weather dependent, which we'll get into. But it's also used for water treatment, chemical manufacturing, and then obviously rock salt can be used for consumption as well. So what's interesting about salt is that the market structure is very favorable, meaning that in most markets, there are only a few players that can profitably serve the market. So, I mean, it's a low value, high weight product, and shipping costs are very high. So it's a very local business. So you need either access to rail or waterways in order to go a long distance. And then in shorter distances, it can be trucked, but it's still very expensive. So it's a very local business. And as a result, there just aren't that many players that can serve the market. And so if you're in, Bowling Green, Ohio, for example, there's probably, 2 or 3 players who can actually serve that market. So you have duopolistic and oligopolistic environments in most of their end markets. And the pricing power that comes from that is that there is variability in yearly pricing, but over the long run, salt is appreciated in price about 3 to 4% per year. I think that's a great play if you're worried at all about inflation, but you need to remember that it can move around a lot based on the prior year winter. It's pretty simple. If it snowed a lot or it was very icy and inventories are down, there's a lot of pricing power. If it hasn't snowed very much and inventories with the municipalities are really high, then the pricing power is not as strong. So that's just the way it works. So let's see, where was I? Basically this is a mission critical material. There's no way to operate in New York City, for example, without de-icing salt. So it's something that's not going away. And so what I really see is I see this business as having irreplaceable assets, right? You have the largest rock salt mine in North America. And this business, has traditionally traded at relatively, I would say, pedestrian multiples relative to other businesses like these. I compare this to the aggregates industry, where, like anybody who's familiar with Martin Marietta Materials or Vulcan Materials, like those stocks trade at, 17 to 19 times EBITDA. And they're more like infrastructure assets. And I think the salt business specifically is more of like an infrastructure asset. And the management team is aware of the, I think, underappreciation of that business, and is doing everything they can to show that it is more of an infrastructure type business. This is just a little bit of a chart on their production. They have capacity for salt in North America, I think total capacity is about 16.2 million tons, but the largest being at Goderich, which is the mine in Ontario. The second segment is a plant nutrition segment. So what really happened was the old management team made a really poor acquisition of a company called Produquímica in Brazil. And they got themselves out of, they're mainly a North American and then UK player, and they got themselves into Brazil, and it was really a disastrous time. They didn't really know what they were buying, and currency went against them, and it was just always a problem. The new CEO came in 2019, and he decided to sell the business. I will say that we pushed very, very hard for this to happen, and thankfully Kevin Crutchfield came to the decision on his own that they should sell this asset. So they're divesting it. They sold part of it to ICL, which is the Israeli chemical company, for 400 million. And then there's a sneaky good water treatment business that is still for sale, that could get I think a multiple and a valuation higher than people are expecting. But that business is probably going to be sold imminently as well. So what are you left with in plant nutrition? You literally have a monopoly in domestic production of SOP. So SOP is a sulfate of potash versus muriate of potash. So if it's for higher value crops. A lot of people may be familiar with a company called Nutrien, which MOP is one of their big products. SOP's always trades at a premium to MOP because there's no chlorides in it. So for drought conditions, people use SOP. For higher value crops like nuts and fruits and stuff, it's a better potash. The issue is that if it gets too expensive, people just don't use it, and they'll use MOP instead. So you'll see pricing for SOP trade kind of in line in terms of the change in pricing will be in line with MOP because of that. There's a trade-off if SOP gets too high. But really the only imports are from the EU, and there is no other large domestic producer. So you really have a monopoly in a really high value agricultural product in growing areas. If you think of, like, this isn't row crops, but people are trying to plant more nuts and more fruit as people's tastes change. And so the main production comes from the Ogden, Utah evaporation ponds. They have 55,000 acres of ponds where they use this evaporation process, where the byproduct is SOP and salt, basically. And I think there's another byproduct as well, but that's where you get all of the SOP that they produce. And so in a normal year, they can do about 320,000 tons of SOP. They've talked about 380 this year. I guess there's like slightly better conditions this year. And the issue with this business is it hasn't performed that well recently. And the evaporation ponds haven't been producing at a margin that they've been happy with. And so they're working on that. I think there's some more upside from here. So I've talked about the two business segments. I'll pause there and see if anybody has any questions.
Hey, Ben,
Yes.
Keith, what is the third byproduct of SOP? There's salt.
You've got me. It's some kind of like a magnesium chloride, I think it might be. It's not their biggest part of their business, so I don't actually. I'm sure they offload it to whoever uses magnesium chloride, but I think that's what it is.
Okay, thank you.
So the second pillar of our investment here is people, and people are really important in everything we do. We're always really focused on people's capital allocation chops and how they think about culture and building the company. And so Kevin Crutchfield came in 2019. He worked as a coal miner before. He was the CEO of ANR, which was a coal company. If he knows anything, it's about how to run a mine. And that's why we really like him. And so unfortunately, the previous management team had spent hundreds of millions of dollars, and they literally messed up the mine production at Goderich. Whoever the consultants were that told them, the CEO was more of an ag guy, and whoever the consultants were who told them how to build a mine, they were wrong. And they had these huge margin targets and about like all the efficiencies that they were going to get from this process, and they totally blew it. And so Kevin's come in and he's created what's called the diamond structure. I'm not going to get into the nuances of coal mining of salt mining. I don't necessarily understand them to the degree that he does, but they've changed the process and margins have been improving. The other thing that happened with the old management team is they had terrible employee relations. So there was a strike. There was also a mine collapse where people, I think, died or very minimal were injured. And so it was a really, the Goderich mine was run pretty poorly, and all of that has been turned around. They actually just signed a new agreement with the Goderich union. So, all of that has been remedied. And he's also come in, as I've mentioned, he's divested non-core assets. And so he's taking the leverage down. It's down under 3x by the end of the year. And I think the stock always traded at a discount because people didn't think the dividend was sustainable. And amazingly, they've been able to delever, and I don't think there's any chance they're cutting the dividend. But Kevin's just maniacally focused on making Goderich more profitable and getting the plant nutrition margins up. So with the valuation, currently trades around 11 times 2021 EBITDA. It's certainly not dirt cheap. I think whatever, we could have bought anything last year in the summer, but it's up a fair amount since then. But we think this is a business that is underappreciated, that has irreplaceable assets. And if you look at there's no perfect comp, which I think Wall Street often has trouble with. But in this case, you see, if you look at Martin and Vulcan, the aggregates companies, those stocks both trade over 18 times. FMC and Corteva, which are kind of pure play, either seed, they're crop protection and seed companies, they trade over 13 times. So it trades at a discount to those. It's a little bit of a hard company to DCF because tell me how much it snows next year and I'll tell you what the margins and cash flow look like. So, you kind of have to do a sum of the parts or an EBITDA based multiple to come up with a valuation. But I think the company has always been in the kind of the penalty box because of poor management and too much leverage. And I think both of those are being remedied to a very large extent. So, we think the private market value right now is in the mid 90s. That's like 13 times our normalized EBITDA number. Again, not dirt cheap, but for the quality of the asset in a low rate environment, we think it's a very attractive situation, given the opportunities for improvement when it comes to the productivity of their assets, and then obviously the margins associated with those. There's a couple other things going on that are really interesting. There's a salt mine that shut down in the south, and CMP has been taking some of that share. So they just basically, the competitor left the market, which is helpful, which is why if you just looked at their recent earnings, their volumes were up a fair amount. We also think that there'd be a lot of buyers for plant nutrition. As I mentioned, it's a basic monopoly in SOP in domestic, when it comes to domestic production, and the CEO is not an ag guy. So I could see, if an offer came in that was high enough that they would delever further, and they'd be a pure play salt company, which I think, it's a little easier for people to understand. So just a quick summary, we think they have great assets that have long lives. They generate a lot of cash. They produce high margins. And as I mentioned, specifically in salt, well, I guess in both segments, they're really well competitively positioned. They're operating in duopolies and oligopolies, and then in SOP kind of a monopoly. The new CEOs come in and really improve capital allocation and margins. Assets like these, I think, could fetch a very high value in the private market. There's a lot of room for improvement from here. The stock is probably not a multi-bagger from here. I mean, anything can happen, but really, I think the future returns can be very attractive relative to a market that we see as pretty expensive. And in the meantime, you get a 4% free cash flow every year. And there's also one other little thing, is that there's a salt asset for sale. Morton's, which is one of the largest competitors, is owned by company K+S, and they're divesting the Morton's asset. I don't know if you know the Morton, you ever see Morton salt on the table? They're divesting that asset, and they're being forced to sell their Northeast business. And I don't really know who else could really bid for it. I think CMP is in really good position to bid for it. It's not a game changer, but you always want to buy something that's a forced divestiture. And so with that, I'll stop and take questions. You can look a little more about us. Oops, that should say, that website should say covestreetcapital.com. You can see my email address there. And also follow me on Twitter. I'm pretty active on Twitter. I promise you, I'm not tweeting about Bitcoin. I'm talking about securities that we own and invest in. And I like to think of us as investors and not speculators. So with that, I'll stop and happy to take questions.
Ben, is that Twitter address correct though?
Yeah, Inoculated Invest. Yeah, it goes back to my old blogging days where I was the Inoculated Investor.
Got it.
Any questions?
You answered mine yesterday.
Do you know who owned the company before it went public? Was it a private equity owner?
You're talking about CMP?
Yes.
So this was I need to go back, but this was originally part of FMC, which is another one of our holdings. This was initially part of FMC, and I think that it was in private hands, potentially private equity, until it went public. So I think you're right there. But this goes way back to FMC as a conglomerate days.
Was it a company called Winchurch, a private equity firm called Winchurch? Canadian?
I'd have to go back. We haven't owned it that long that I haven't gone back that far. I don't know.
Okay, thank you. Very interesting, I think.
Yeah, I think it's an interesting set of businesses. I think they're underappreciated. Again, there aren't many assets out there. There's no comp, so it's a little hard for people to say this is what it should be worth. But so you kind of have to triangulate and look at similar businesses that generate similar margins and have similar competitive positions. And we just think that it trades a large discount to those. So that's
one last question. Do they
Sure.
have a strong enough balance sheet to make acquisitions?
So, until very recently, the answer was absolutely not. because they levered up, well, they'd spent a bunch of money on Produquímica, which was the Brazilian asset that they got crushed by the currency, and it just even if there was growth, it was all eaten up by currency, and they didn't run it particularly well either. So it wasn't generating a lot of cash. So it wasn't a great, it didn't help them at all. And the other thing is they blew all that money on the mine construction, and so that literally that money just poofed because they built the mine the wrong way. So they were over levered. It was one of my favorite pushbacks against my colleagues with why we shouldn't own this, because we owned it in one of our other strategies, and I hadn't put it in this strategy because I didn't like the balance sheet. And so what Kevin's come in and done is gotten the operations and EBITDA in the core businesses up, and then by divesting Produquímica, it's a nice delevering event. So they've guided to be at 2.75 to 3 times levered by the end of the year. So I think they could make a deal. I don't really want this business to be 4x levered again. So I would hope that they would focus on deals where there are strong synergies and kind of like bolt-ons, as opposed to some kind of transformational deal. I think personally, and this is just my opinion, that the real opportunity is to monetize the SOP business. I don't think Kevin Crutchfield has ever been a huge fan of and he's not an ad guy. I know he didn't like the South American business, but I don't think he's ever loved the SOP business. But he's also not going to sell it when it's underperforming. And so they're working on getting the evaporation ponds and their inventory management in SOP to be better. I think that would be the opportunity, monetize that, assuming that there's a tax, there's not a whole lot of tax leakage. And then you could think about, what in the world is this company going to be? And I don't know. You can ask yourself this question: Does it make sense to be a pure play salt miner? Because one of the issues with this company, as we've discussed, is that you've got this variability in cash flows. I look at this as a perfect private asset. If you were a private owner, you wouldn't care if it snowed. I mean, if Andrew asked, I think, or somebody asked me a question yesterday about, global warming and how does that impact it? I think of it as climate change is leading to more variable weather. And so, we just had ice storms in Texas, which were unprecedented. So clearly it's not necessarily a home run to say that the world is warming and we're getting less salt. But my point is, in any year, it could snow or it could not snow, but as a private owner, you don't really care as long as you're not over levered. It's just a little bit of a weird public company, because you're going to have this period where, you're going to have some periods where it snows like crazy and pricing power is going to look great. And then the next year it doesn't. And so people try to figure out what the run rate cash flows are for this company, and it's a little bit hard to do. So they're either going to have to, buy something else to allow them to have a little bit more diverse earning stream, or I think this would be a perfect private asset, or either private equity or family, or even a segment within a larger organization that doesn't have that doesn't have the variability, and it doesn't need the cash flows. So if it doesn't snow in one year, it's not a big deal.
Do they have the money to acquire Morton's?
Not the whole thing. There's a company called Stone Canyon. Stone Canyon's the one who's buying. We don't know whether they bid on it. We haven't. Management has not been willing to tell us whether they bid on the Morton's asset. I mean, from what I understand about the Morton's asset, it's more of a consumer business, and so I think they're more focused on, in general, the municipality business, the de-icing salt business. So I do think they certainly have the bandwidth to bid on this divestiture that's happening with the Northeastern Morton's asset, but they did not. They either didn't bid, or they didn't go after, or they didn't win the auction for the Morton asset.
Isn't Stone Canyon the Davis family office?
Like Chris Davis?
Like Marvin Davis and his son?
Yeah, I don't know them. Yeah, I'm not sure.
That's
LA
oil.
Oil.
Yeah, well, they do a lot more than oil, but and they have Stone Canyon is one of their investment entities. I just don't know if it's the same one.
Yeah.
Interesting. Well,
Any other questions about CMP?
I-
Go ahead.
I
Sorry.
thank you. I think that was a very, very good, concise presentation and an interesting situation.
Okay. Well, absolutely feel free to reach out to me if you want. I'm happy to send you the slides, or I'm happy to follow up if people have questions.
Can you, if it's
And-
public, can you say what your basis was or where your investment
Oh.
started? Is that not public?
Yeah, it's not public because we don't have we don't have a mutual fund in this strategy. So
Okay, okay.
anybody else? I mean, I'm happy to answer more about CMP. I'm happy to. If people want another idea, happy to talk about another idea. Just let me know.
What else do you like that's smaller?
Give me some market cap parameters.
Micro cap,
Yeah.
so less than
Yeah.
$1 billion.
Yeah. We might call it, so we have at Cove Street, we have concentric circles. We all work on small cap because that's our core strategy. And then I co-manage this mid strategy, and then we have micro as well. And I'm on that's the other side of the concentric circle that I don't really touch. So I know those names, but I don't feel comfortable, representing them the way that I think my colleagues would expect me to be, would hope for that I could be able to do in a forum like this. So I don't have a lot to tell you on the microcap side.
Okay.
You think this company is destined to be sold pretty soon?
Yeah. I don't think this makes sense as a public company. It doesn't check the boxes. I mean, unless it's like a REIT or something like that, unless you can turn it into a SALT REIT, which I think the IRS would have a little bit of a problem with that. It's just the cash flows are too variable. And so people want growth. People want consistent growth. People want margin expansion. People want, visibility and cash flows going forward. It's just really tough to get that here. And so I don't think, I think that's one of the reasons why this business has it's not traded at 3 times EBITDA. It's not been hated to that degree, but I just think it's never gotten the appreciation it deserves given the scarcity of the asset base. And it's because of those variable cash flows. So yeah, I think, again, I don't see this as a public company, in the same structure in 5 years. It doesn't make sense. And I don't think Kevin Crutchfield is like in the seat forever kind of guy. Like he would monetize this asset if the price were right. Richard, do you have a question?
Yeah. Can you hear me?
Yeah, I can.
What's the symbol?
CMP, Charlie,
C-
Mary, Peter.
And where is it traded or listed?
US.
What exchange is it on? Is it on? It sounds like it's on the New York or.
Yeah, I think it's on the New York Stock Exchange.
And what's the current price?
Here, if you missed it, I have a slide here. It's $71. Market cap's about 2.4 billion US.
Mhm.
Another question. What's the average free cash yield, or what's the free cash yield on an average snow weather year?
Yeah. So, I mean, it's a little hard to say to tell you the answer to that, because tell me, Kevin's come in and made it a lot more productive. And so I think they'll generate better cash going forward. But I mean, right now, if they're going to do 100 to 120 million in free cash flow, that's like a 4% yield on enterprise value, and then like whatever 5 to 6% on equity. So not insanely cheap, right? This isn't like 10 times free cash flow, but I mean, we think given the quality of the assets and the potential improvement that we're seeing in cash flows as they've gotten much better at inventory management, working capital management, we think that those cash flow numbers could go up over time, and this business can generate, whatever metric you want to use, either net income for free cash flow to net income or free cash flow to EBITDA will go up over time as they basically figure out how to manage the mines a little better.
Got it.
Thank you.
All right. Well, thank you, everybody. Hope it was helpful. Please feel free to reach out if you're interested in learning more about myself or CMP or Cove Street. And yeah, maybe I can do it again in another event. Thank you.
Yeah, thank you.
All right, everyone. Thank you.
Bye.
Bye.